Amazon just reported earnings, and unfortunately, the stock is down roughly 4%. Now, if you are an AI stock investor in companies like Nvidia or Marvell, Amazon did mention that they're going to spend roughly $100 billion in capital expenditure this upcoming year, almost over $20 billion of what they spent in 2024. They also share some great insight about the AI market, about DeepSeek, and how they're seeing the AI space. So if this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for special offer at fool.com/Jose, and check out my free daily semiconductor newsletter, What the Chip Happened.com. Now, too long don't watch. Amazon is just saying that, hey, look, AI is moving in the right direction. They believe that they need to increase their overall capacity because of the huge demand of AI. So the two main players that are benefiting, obviously Marvell. For those that are not familiar, Marvell is the company that helps Amazon design and build their own AI chip, and then Nvidia as well. Now, the market is going to give more attention to Marvell because they believe inference is no longer a moat for Nvidia. I don't know when the market started to think that's the case, but later in today's episode, I also want to showcase why Nvidia and inference is still a compelling offer. So let's take a closer look and we can get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so a quick overview. We can see Amazon plans to spend roughly $100 billion this year to capture once-in-a-lifetime opportunity in AI. The company, as we're going to see in their earnings transcript, mentioned that they spent about $26 billion this fourth quarter in capital expenditure, mainly coming in AI servers and AI infrastructure. And that similar run rate should continue for the rest of 2025. So quick napkin math, that's about $104 billion in capex this year. Now, they did spend about $83 billion in 2024. So about a $20 billion gain, which again is very, very bullish. Now, some people might be wondering, Jose, if $20 billion is coming in, a huge portion of that is most likely going to go to Nvidia in forms of AI chips. Why are companies like Marvell going? Now, I think this is where things get a little bit tricky as an Nvidia investor, right? There's two things happening. First is inference is the new topic of discussion with things like DeepSeek, with things like R1 and reasoning model. And many believe that inference is no longer a competitive moat for Nvidia. And we'll kind of show a little bit of why that's the case in a bit. So that's reason number one. Reason number two is just the law of numbers, right? Marvell only makes a few $billion in AI revenue per year. So an extra few $billion could represent a strong triple-digit growth. Now for Nvidia, right, that's not the case anymore. Nvidia already makes a few $20-30 billion per quarter on AI chips. So an extra 20 billion is still kind of, and this is just assuming, right, that the money would go there. But just on a top level overview, now a 20 billion on something that they make more than that per quarter is no longer a triple digit growth, right? Now you're kind of seeing the growth rate not being as fast. I personally, as Nvidia being my number one position, never thought that triple digit growth was going to be the thing. And I don't think most investors thought that's the case. If you did, I'm going to say maybe Nvidia is not the stock for you anymore. But I do believe Nvidia will still be able to do really strong revenue growth compared to the overall market. They're still going to be able to be a free cash flow machine, which is going to help them with future investments. And as we're going to see, they are a beast in inference. Now, I kind of want to look at what Amazon said about AWS, right? Obviously, Amazon is a big company, but here in Jose Najarro Stocks, welcome if this is your first time here. We really only care about the AI infrastructure space at the moment, obviously because it deals with a lot of our semiconductor and AI investments. So moving on to AWS in quarter four, AWS grew 19% year over year and now has a $115 billion run rate. AWS is now a super huge business by most standards, and they expect growth will be lumpy over the next few years for a few things: enterprise adoption cycles, capacity considerations, and technology advancements impacting timing. So it's hard to overstate for them that in the short term, things can be a little iffy, but in the long term, they are very, very much optimistic for AWS customers and the AWS business. The main reason is they believe we are going to be in a world where virtually every app has generative AI infused in it, with inference being a core building block, just like compute, storage, and database. And most companies having their own agents that accomplish various tasks and interact with one another. And that is something that is going to be most likely built on top of the cloud, with the largest portion of it on AWS, right? So there's this huge growth momentum for cloud computing because of AI. And they mentioned that, hey, look, for this AI innovation, there's three layers that are really, really important. The first layer is the hardware, where most AI compute has been driven by Nvidia AI chips. They obviously have deep partnerships with Nvidia, but they also talk about their Trainium chip, right? And I think this is the time when Nvidia stock investors might start to get a little iffy. It's like, maybe Nvidia's not going to get all that money. Maybe Marvell is going to get all that money. Well, this is when you start to think of, hey, look, who's going to innovate at a faster rate? Who's going to be able to produce more chips than the other player, right? Right now in the AI market, we are supply constrained in the AI chip space. So just single-handedly, who can develop the more chips and who can innovate at a faster level? Nvidia is developing chips almost on a 6-month basis, sometimes normally on a yearly cadence, right? But sometimes we see some of these improvements on a 8-month basis, much faster than any of these tech players can design or develop their next generation of chip, right? So Nvidia not only is able to do it faster and innovate at faster levels, creating probably even better price performance efficiencies, but they also have a huge software stack and a huge development stack that makes them a compelling force. And if you are an Nvidia investor, those are things you have to remember, that inference is not easy. So Amazon does mention that they're going to continue to invest strongly on their Trainium 2. That's why Marvell is seeing a a nice boost after hours, right? 3% is not huge, but in the past 5 days, Marvell is up 7% from that kind of bottom that we saw after the DeepSeek drama. The stock is already up nearly 20% and back to its highs of the year, right? So overall, Marvell is one benefiting from the ASIC market. And like I mentioned, is that smaller player base where a few $1 billion going to Marvell can be strong double-digit, even triple-digit growth for the company. Now, some other things I wanted to kind of take a closer look at AWS was their capital expenditure. They mentioned 26.3 billion in fourth quarter, and that run rate will be what should be representative for 2025. So like we saw earlier, 26.3 times 4, that's about 104, almost like $105.2 billion to be exact. So we're going to be in that low to mid $100 billion capex, and primarily relates to AWS, including to support demand for AI services as well as tech infrastructure. So overall, we can see that this is definitely very bullish for the AI market. Now, they mentioned that the vast majority of CapEx spend is going to be on AI. And this is something important. I believe every other AI player has said this, that they don't procure new AI investments unless they see significant signals of demand. And so AWS spending on CapEx particularly is, they see this as a one lifetime opportunity in business opportunity because they're seeing such huge growth opportunities in the short, medium, and long-term potential. So again, this could be bullish for not just NVIDIA, but the overall AI space, as it showcases that there is huge demand for AI compute. Now, they kind of talk a little bit about kind of the constrained capacity, and they mentioned that they could be growing faster if not for some constraints on capacity. And they come in various forms. They would say that chips from their third-party vendors came a little bit slower than before, with a lot of midstream changes that take a little bit of time to get hardware actually yielding the percentage healthy and high-quality servers we expect. So maybe AWS mentioned is probably kind of that masking issue that we saw with Blackwell, but Blackwell did seem to have a bit of delays, and because of that, it did impact kind of the growth capacity. Remember the masking thing we saw a few quarters ago, we're kind of maybe pushed a little bit, so they mentioned if that was kind of intact, AWS and all these other players would be growing a lot faster. They also mentioned that it comes during a time when they're launching new hardware, and it takes time before that to ramp up. They're also constrained in power, where they think the world is still constrained for the foreseeable future. And if all these constraints were not there, they would be able to serve more and more customers. So that's very bullish, as it shows an indication for strong AI demand and strong AI capacity demand. The other thing I want to talk about is kind of what AWS mentioned about DeepSeek. And just like every other player, everybody is impressed with what DeepSeek has done. They've seen how they're optimizing in training, how they're optimizing in inference. And for those that are building all types of models, they're learning from one another. And this is what happens in this space. So now what is actually pretty exciting is kind of this law that we've been seeing, that most people think that, or I've come up with this assumption, that if you're able to decrease the cost of any type of technology component, in this case, we're really talking about inference, that somehow it's going to lead to less total spend in technology. And they mentioned they've never seen this before. They gave an example in 2006 when they offered kind of storage for the first time, how it's much lower than before, but companies continue to use it and use it at a much higher level. And people thought that people would spend a lot less money on infrastructure technology. And what happens is companies will spend a lot less per unit of infrastructure, and that is very, very useful for their business. But then they get excited about what else they could build that they always thought was cost prohibitive before. And they usually end up spending a lot more in total on technology once you make the per unit cost less. So they believe the cost of inference will meaningfully come down, and they will make it much easier for companies to be able to infuse all their applications with inference and with generative AI, right? So if inference cost goes down, it's going to open up the map for the world for developers to create some crazy application that could revolutionize the world and need more compute power. So they've seen this before. So DeepSeek is not a killer for the AI market. Next, I want to kind of look at some NVIDIA thoughts, but just want to make sure I didn't miss anything here that I might have highlighted. So now that we understand that DeepSeek is not the killer moment of AI, people are wondering, is it the killer moment of NVIDIA's moat, which is normally known as the training. And then in another episode, I'm actually going to showcase everything that NVIDIA has said in their last earnings call about inference, but I just want to show some top level overview. In just the past few hours, NVIDIA released that in just 2 weeks, they have found even more cost effective with DeepSeek R1. So they say, check out DeepSeek R1 performance gains on NVIDIA Hopper GPUs with feature powerful FP8 tensor cores. And you can see kind of a huge improvements, a 3x improvements in just 2 weeks using NVIDIA GPUs. And this is why you want to buy NVIDIA GPUs, because they're going to continue to optimize their software stack. They're going to continue to push in inference levels being as low as possible, because you're going to see then everybody using AI applications, and you're going to see the demand for compute increase. I mean, I think we see it here. Jensen, in their last earnings call, mentioned that the goal is to inference, and we're starting to see that growth happening. So he's super excited about that. Inference is also super hard, and the reason why inference is super hard is because you need the accuracy to be high on one hand, you need the throughput to be high, so the cost would be as low as possible, but you also need latency to be low. And computers that are high throughputs as well as low latency is incredibly hard to build. So NVIDIA, they're just a number of NVIDIA is kind of the main player in this space. And in the future with multimodality, you're going to be doing inferencing in multi-dimensions, not just text, right? And that's what makes NVIDIA's architecture so great, because their ecosystem is fantastic. Everybody that is developing in CUDA knows that they can innovate more quickly, as the next generation will still work on whatever hardware platform they create. So, I mean, I think this kind of moat destruction for NVIDIA is not necessary. I mean, Jensen Huang even mentioned their hopes and dreams is that someday the world does tons of inference. And that's when AI has really exceeded, is when every single company is doing inference inside their companies for the marketing department, for everything else. And so they hope that every company is doing inference 24/7, and that there would be a whole bunch of AI native startups, thousands of AI native startups that are generating tokens and generating AI. And every aspect of your computer experience, from using Outlook to PowerPoint, or when you're sitting there with Excel, you're constantly generating tokens. So for the end goal of Nvidia, Jensen himself has said it, and AI is meant to be super cheap, because when it's super cheap, everybody's going to be using it, and the amount of compute power that you're going to need is going to be insane. So I think the market is sleeping on Nvidia right now. I think DeepSeek and any other future innovations in the AI space that makes AI cheaper might create negative volatility for Nvidia. And I believe those are going to be the times where it's great buying opportunities. So I hope you guys enjoyed today's episode. I know it was a little bit longer than probably some of my other episodes, but take care, have a good day, and see you all next time.